Welcome to the podcast that will teach you how to successfully invest in and build steady streams of passive income from the highly lucrative niche of mobile home park investing. Veteran real estate investors Kevin Bupp and Charles Dehart from Mobile Home Park Academy will personally share with you the valuable lessons they've learned along their journey as mobile home park investors, so that you too can learn how to build massive cash flow and huge profits from this extremely lucrative niche. So without further ado, let's welcome your hosts for today's show, Kevin Bupp and Charles Dehart.
Welcome, guys and gals, to the Mobile Home Park Academy's weekly podcast, where we'll provide all the information that you need to know to successfully locate, negotiate, close on, and make huge profits from the lucrative niche of mobile home park investing. I'm your host, Kevin Bupp, and in today's show, we're going to be speaking with real estate expert Matt Ricciardella. Now, Matt is the managing member of Crystal View Capital, a private investment firm with a primary focus on value-add real estate. Now, since its inception in 2014, the firm has raised nearly $17 million of equity capital and currently has approximately $60 million of assets under management, with a specialized focus in the manufactured housing and self-storage asset classes. So, guys, I'm very excited to have a candid conversation with Matt about a variety of industry-related topics here in the manufactured housing space. But before we get into it, I have a few quick housekeeping items I'd like to run through with you. First and foremost, I've been mentioning it now for the last couple of episodes, but I should mention it every episode. I just forget, really, to be honest with you, is, we're in acquisition mode here at Sunrise Capital Investors, and we're always buying deals, always looking for the next opportunity. We've had a number of you that have brought us deals over the last couple of years. We just got done closing out, I guess, about 2 months ago on a deal where we paid out a very large finder's fee. I think that one was $75,000. We paid six-figure finder's fees over the years, and we'd love to pay you a finder's fee if you bring an opportunity our way. So if you're out there in your hunt and you find a deal that maybe you just can't take down on your own, it's too large, please think of us. And then also, we're open to joint venture opportunities as well. We've got the ability to bring the capital and the track record to the equation. So if maybe you're getting started and you come across something that's a good deal and you just don't have the means or the wherewithal to take it down, please think of us. Again, we're open to both types of opportunities, whether it be JV or paying a finder's fee and just kind of taking a deal from there. You can reach out to us via our website, sunrisecapitalinvestors.com, and go to the Contact Us page and just give us some details on you and maybe a little bit about the opportunity and a way to get back in contact with you, and we will within 24 hours. Next up, we actually just opened up the second tranche in our Mobile Home Park Growth and Income Fund. So if you're an accredited investor and you're interested in partnering with us on our acquisitions here at Sunrise Capital, you can go to our secure investor portal by going to invest.sunrisecapitalinvestors.com. Again, that's invest.sunrisecapitalinvestors.com. And there you'll be able to access our PPM and investment summary, some webinars that we've actually done on this growth and income fund, and learn all about the opportunity of working together with us. And then lastly, guys, if you happen to be in the Tampa Bay area, which is where we're based out of, we're a short 15 or 20-minute jaunt across the bridge from the Tampa International Airport in a little area called Safety Harbor, just north of Clearwater. So if you happen to be in town, you've got some extra time, we love connecting with other folks that share a similar passion to ours for real estate investing or mobile home park investing. Just basically, someone that's in the space, a real estate investor that likes to talk shop, likes to talk business. We love meeting you, love spending time with our listeners. And so please reach out to us. We'll try to coordinate a time while you're here to get together for whether it be a coffee or lunch, whatever you might have time to do during your visit. You can, again, contact us through our website, sunrisecapitalinvestors.com, and just let us know when you'll be in town. And I'll reach out to you personally and see if we can coordinate our schedules together. So now I'm excited to, guys, get on with our guest for today's show, Matt Ricciardella. And Matt and I actually met, I don't know how many years it's been now. It's probably been about 4 years, maybe 5 years. It's been quite some time. But Matt and I actually
5 years.
Yeah, 5 years. Okay, we met many years back at a syndication workshop, basically a 3-day event that essentially talked about the art of raising money. And so Matt actually has been a guest on my other podcast, Real Estate Investing for Cash Flow. Again, many years back, he was a guest there. And today he's now coming on to talk about his experience in the mobile home park space. He's got his hands in a variety of different asset classes out there, self-storage, multifamily, manufactured housing, and I'm sure there's a few other ones as well that we might hit on today. But today, ideally, we're going to spend a lot of our focus on his experience and his interest in the mobile home park or manufactured housing space. So Matt, thanks for joining us here today, bud. Excited to have you.
Absolutely. My pleasure. Thanks for having me back on the show, Kevin.
Yeah. Looking forward to getting an update from you. Again, it's been a number of years. It sounds like lots of positive things are happening in your business. I know we talked for a few minutes before we started recording here, and you guys are, working on your second fund, and you guys are buying deals. You're still finding opportunity out there in the marketplace, having to dig a little deeper, just like us, but still, you guys
Absolutely.
are very good at finding those value add opportunities and not just finding them, but actually realizing the value, which is probably the more important part of the equation. Finding the deal is one thing, but actually knowing how to realize that upside and that value opportunity is really where the plan gets executed. So maybe, Matt, if you could, for those that aren't familiar with you and your background and your story, maybe take a few minutes. Again, I gave you a little bit of an introduction, but not too much. So take a few minutes and tell our listeners a little bit more about yourself, if you would.
Yeah, absolutely. So I started my career in real estate investing back in 2005, 2006. And in my hunt for finding deals that would yield the best cash flow, I kind of came across mobile home parks and self-storage as the key assets that I wanted to focus on, since those properties yielded the highest free cash flow out of all commercial real estate asset classes that I came across and underwrote. So I started my career investing for my own account. I started buying smaller parks, doing syndication type deals, and the focus was always value add. So when we were looking at a deal, still today when we look at a deal and we're underwriting and sizing up that opportunity, we like to buy based off the in-place net operating income with that unlocked hidden value there by increasing rents or filling vacant spaces, decreasing expenses, those type of things that are really going to drive that value by increasing the NOI in a short period of time. So that's how I began my career, and I did very, very well and built up a nice asset base personally. And back in 2014, around the time when we first met, Kevin, we went out there and we executed upon identifying underperforming or non-performing commercial income producing assets with an emphasis in the self-storage and mobile home park spaces. And they were mostly mom and pop type deals there was a lot of potential in those opportunities, and they were all sourced off market. One of our core niches, if you will, is we don't go out to Marcus and Millichap and participate in auctions like a lot of other buyers do. What we actually do is we have lists of owners that fit our deal parameters of what we want to pursue. And then we contact those owners relentlessly on a daily basis. In fact, we've got an in-house sales team that's making hundreds of calls per day, and they bring me those leads. I vet those leads, and then I try to put deals together. Mm-hmm. So that's how we're able to really find opportunities at below market prices.
No, I absolutely agree. And it sounds like your model is very similar to ours. That's pretty much where all of our opportunities are sourced, is direct to owner marketing. And last year we bought 8 communities, and 7 of those 8 were direct to owner, type arrangements, where it was either a direct mail piece or we've got a full-time person in house that does outbound dialing as well. And it's I always like to say I would love to buy through brokers, and I've got lots of friends that are brokers. I'm close to a lot of the industry brokers in our space, but I can't afford to. We can't afford to. There's always, I always like to say, there's always someone out there willing to pay much more than you or I for the same opportunity. And especially in a competitive environment, you're surely not going to come out ahead by buying something at a sub 6 cap rate, which I see a lot of these value add opportunities trading for now. It creates a lot of unnecessary risk, and really not a lot of opportunity or upside left that's easy to obtain. So I'm not sure if that's been your same experience with what you've been seeing coming across your desk from the broker world, but that's surely been ours.
Yeah, I would agree with you. Usually when we work with brokers, it's on the sell side, not on the buy side. And it's a bittersweet event when you win a bid and you're high-fiving your team and you say, hey, we paid more than everyone else out there. I mean, yeah, you got the deal, but but when you're buying stuff off market like you are and like I am, no one else is there competing. So when you walk away, I got a good deal on my hands here. So it's a different experience.
And I will too. Well, I want to speak to for all the brokers that are listening. This isn't to throw brokers under the bus, because again, we love brokers on the sales side. I mean, we've got some parks on the market right now that were things that we've acquired in the past 3 or 4 years that are outside of our fund structure. These were personal assets, and On the sell side, it's great. Like, I kind of make the joke with a couple that I'm pretty close with brokers. I love to sell through you, but I hate to buy through you, right? Like, it's just, I'll sell through you all day long if you find those buyers that are willing to pay these, what I feel to be ridiculous prices. But buying, I'm not that guy, right? So we might not do business on the buy side anytime soon, but I'll sell through you if you keep finding those buyers that are willing to pay those high prices. So, and at the end of the day, one of the other big benefits of a broker, a very high quality broker, is that in a lot of circumstances, I see the benefit to where they can act as a mediator. There's been situations to where with a seller, if you're going direct to owner, with a park owner, or just a person that owns real estate in general, and you're trying to buy, having that person in the middle that can help set proper expectations, I've seen come in handy a lot of different times, to where, seller thinks their property is worth $5 million. Realistically, it's probably worth $2 million. If you tell them it's worth $2 million, they're going to think that you're just trying to get one over on them, and that ultimately you're trying to steal their property from them. Whereas if there's a broker in the middle, kind of an unbiased third party, I've seen where situations like that are kind of brought to a normalcy level because of that mediator in the middle, or that broker that's in the middle of that equation, to where that deal might have been lost otherwise, which is, me going directly to the owner and just essentially showing them how I've arrived at that lower than expected value. So I don't know if you've had that similar experience or not, but I see that there's a lot of value there to have the broker in the equation when those situations arise.
Yeah, I agree. I mean, listen, in the brokerage space, just like within any profession, you're going to have people that are very talented and who are very good at what they do, and you're going to have others that may not be so good at what they do. So, I mean, I've had some very good experiences, and I've had some not so good experiences with brokers. But when you find a good broker, they really do act as a middleman, and they could bring a deal together that maybe would fall apart. Yep. So they are worth their weight in gold if you do find a good broker to work with.
Absolutely. Let's talk about maybe some recent opportunities, kind of what you're finding out there. I know you said you just closed. Maybe I don't know if you mind sharing some information on the park you just closed. I think you said Wisconsin. Is that where it was located?
Yeah.
Okay.
Yeah,
maybe kind of give us the how you found it. Maybe it sounds like that probably was a cold call, but then also maybe a little bit of the high level points of the deal. What excited you about it? The size of it. What excited you about it? Ultimately, maybe what you paid, and then also what's the upside and how you intend to achieve that upside. Just so we can kind of get a high level point of view for those folks that maybe even haven't bought their first deal yet. They can kind of see it through your eyes and my eyes of how we actually see value and how we look to execute on that value.
Yeah, I'd be happy to. I'll tell you actually about the last two deals that we acquired, and then I could tell you about a recent sale that we just did 2 months ago as well, if you'd like. The most recent deal is a mobile home community. It's in Marshfield, Wisconsin, and we acquired it for $3.7 million. It's a 175 site community. We bought it through a mom and pop owner through cold call. Actually, I contacted this individual, believe it or not, 9 years ago, and kept a relationship going throughout those years. And when it came time to sell, she came to me and we put the deal together, and it worked out. But here's what I saw as the high level deal points. The key to the deal, in my opinion, was that the lot rents were $245 per month. That's what the current owner was charging. However, we went out, we did a market survey, and we own another community about 25 minutes away. So we know this community, we know this market intimately well. We knew that market rents were anywhere between $300 and $315 per month. So we closed about 2 weeks ago on this deal, and we've already taken lot rents from $245 up to $300. We've already sent out the rent increase notices. That's already taken effect. Now, by just doing that rent increase and increasing the rents $55 per month on 135 occupied lots, you could see that we've increased our NOI rather substantially. I don't have a calculator with me, but at a 6.5 cap, we added more than close to about $500,000 in value by that one rent increase alone. Mm-hmm. So as you could see, there's several ways of adding value in real estate in general, in the mobile home park space. I like to say some is easy hanging, low hanging fruit. Other ways you have to work harder to achieve. To fill vacant lots, that's going to take some time, and that's going to be capital intensive. However, you can add value through that means. My favorite, and I'm sure yours is as well, is to raise rents. I mean, if you could find a park where rents are grossly below market and you could walk in day one and go up 10, 20, 30, 40%, I mean, you're immediately adding that NOI and you're immediately creating value. So that's kind of stepping over those 1 foot hurdles rather than jumping over the 7 footers.
Sure.
Another core way, I'll tell you another deal that we just did. We closed on a mobile home park down in Corpus Christi, Texas. That was late last year. And on that park, we acquired it for $3.8 million. When it was appraised, it actually appraised for $6.5 million. And that's as is. So it goes to show you the value in finding these deals off market. Another off market deal, mom and pop owner, completely mismanaged. We went in there, and what we did on this one, Kevin, is we raised rents slightly. I think we went up $20 across the board. But where the true value add on this deal was, there was one master meter for water and sewer. And what we did is we installed sub-meters on every single unit within that community. So now there was roughly $100,000 expense for water and sewer that the park was paying. Well, now we pass that through to the individual residents based off their usage. So effectively, we increased our NOI $100,000 at a 6.5 cap. I mean, you could do the math. I mean, we created on that deal $1.5 million in value by passing through that one expense. And it cost us about $75,000 to do that. So as you could see, you know, the capital investment to add those meters certainly made sense when you realize how much value you've created as a result of doing it. So that's kind of some insight in how we look at deals and where we see the value add potential.
So you've talked about a few different markets. The first one was Wisconsin. The second one was Corpus Christi, Texas. And then the third, where was that located? What state was that in?
So we just sold the third deal, and that was actually in Wisconsin as well.
Okay.
I can tell you a bit about that deal. We bought that deal back in 2016, and it was 170 sites, about 130 occupied. Lot rents were $200. We went in there and we raised rents to $315 over our time of owning that asset. And we just exited that property in December, and we sold it for $4,250,000. So within 2 years of ownership, we created $1,750,000 in value by just that rent increase. We didn't fill any sites. We didn't add back any utilities, just that lot rent increase alone, plus the free cash flow over our period of ownership. It was north of $2 million of value that we realized from that one deal alone. So really a nice deal for us. But these opportunities are available to all of us. It's just, you've got to dig, especially now, you've got to dig even harder. And then you've got to have the wherewithal to recognize that there's that untapped hidden value. And then to go out and bring that value out and then monetize it in the market. And that's, I mean, really how you make money in this business.
Hey guys, Kevin Bupp here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my two podcasts, Real Estate Investing for Cash Flow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche. And that's the phenomenal niche of mobile home park investing. For those that don't know, I've been a full-time real estate investor for nearly 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe you don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in our up-and-coming deals. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing you with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please go visit sunrisecapitalinvestors.com and click on the investors link to get signed up. It's absolutely free and you'll get placed on the priority list of when new opportunities come along. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-CASH-FLOW without the O. And one of our investor relations team members will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule a call and let's get on the phone and talk. And with that, guys, I like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show.
I wanted to ask you about the rent increase, and ultimately, a lot of folks would more recently the recent deal you just did. I think it was in Marshfield, you know, which is a pretty big rent bump. Any kind of pushback or friction that you received from the residents, and ultimately, how did you approach that? I mean, you didn't literally go in day one and actually hand out rent increases? Did you initially go in and do some capital improvements, and whether it be fixing roads? Maybe there wasn't anything to fix there, but did you spend money or do anything prior to the rent increase? And then ultimately, how was it received by the residents?
Well, look, it's never going to be received well. Folks are used to paying a certain amount. Even if it's justifiable, they're not going to be happy. So to answer the first part of your question, it wasn't day one, but believe it or not, it was day 5. So within 5 days of buying the property, we handed out the rent increases. Yeah, we got some pushback. A couple folks were upset, but that's to be expected, and it always happens that way. However, as long as your rents are at or below market, I mean, you're in a strong position because, as you know, the switching costs are so onerous and so intensive for these folks to move their home. Think about it. Who is going to say, hey, you've gone up to 300, the mobile home park down the street is 315. I'm going to spend $4,000 to $6,000 to move my home down the street, pay $15 more. Nobody. So that you're able to, that rent increase is justifiable, and you're not going to lose any tenants as a result of it.
So what is your philosophy as it pertains to your hold strategy? It sounds like, the one you just sold out of, great upside realization there as far as the equity that was created. Obviously, there was a lot of empty lots, so that maybe the next buyer is going to come in and do the infill. We know that the infill is by far the hardest upside to achieve, capital intensive, time consuming, lots of moving parts there. But what was the thought process behind selling out today and realizing the current value versus realizing the additional upside that exists with those infills?
Well, good question. I think there's a couple answers to that question, Kevin. Number one, in our first fund, we actually are in the wind down phase right now. So instead of spending the next 5 to 10 years to fill up another 30 to 40 sites, we're really winding down our fund. So from that perspective alone, it made sense to exit this asset. Secondly, we have 2 other parks in the same market, and it is challenging to find quality used homes in this environment right now, since this business is hot. The mobile home park space is in high demand, and we sell used homes. New homes don't really move for us. So to have 3 parks with over 150 vacant sites is just not a good use of our time to spend all day filling up those sites. So we exited that one park, and we're going to spend our time filling up the 2 other parks that we own in the same market. and go out there. We have relationships to buy used homes. We're going to bring those used homes in, do some rehab, and fill those parks up over time. And the park that we sold was a little older. There were some older homes in there. So I really wanted to focus on the communities that had the newer stock that I feel that we could exit one day to a REIT versus a more mom and pop owner. So that was kind of my rationale about exiting on that deal and keeping these other two.
What are your thoughts regarding park-owned homes? I know it's a question that's going to be answered differently from every different operator that's out there. I feel like 15 years ago, everyone would have probably said they absolutely hate park-owned homes. In the last 5 years, I feel like that has slightly changed with a lot of operators to where they're okay with it, or they just accept the reality that you're going to end up with park-owned homes. And then some have fully embraced it. They're like, hey, I like the rental model. I'm going to fill up my park with a bunch of different rentals. Our philosophy is that, it's kind of it's a necessary evil. We don't love it. We accept it. So we're kind of right in the middle of the road there. But where do you guys fall with regards to park-owned homes? How do you feel?
Yeah, well, I guess we've got to look at it from a few different perspectives. As an operator, it does make it a bit more challenging on the operations side, where now all of a sudden you are responsible for toilets and leaking roofs. And that's kind of why we entered into this space,
Sure.
Because we own the land and the infrastructure, and we're leasing the personal property to our residents. However, like you, I would agree that sometimes it is a necessary evil, and it is a stepping stone to filling vacant sites. You're going to have some park-owned homes, whether they be straight rentals or rent-to-own programs. If you're selling, kudos to you. I know that's a little bit harder in some markets, but, if I had my preference, I wouldn't have any, but unfortunately, you're going to need it. Now, on the buy side, obviously, I would prefer not to have any. However, they're going to come with an acquisition probably 9 out of 10 times. The key is if you're underwriting a deal, you can't add any value to the income that's derived from that home. From the lot, you can. As an example, let's say that park-owned homes, you're charging straight rent of $600 a month. Your lot rent is $300 a month. That $300 that's derived from the home cannot be included in the cap rate. And no bank out there is ever going to underwrite that income either. So I think the biggest pitfall that new buyers in this space make is they will underwrite that income that's coming from those park-owned homes, and they'll apply it to the cap rate. And they will find out once you go to get financing, all banks are going to back that income out. So what you need to do is, here's what we do, is we actually will underwrite the park based off the true NOI from the lot rent. And then what we'll do is we'll take the homes and we'll apply a Kelley Blue Book value to them at a wholesale price. And we will give the seller consideration based off of that, and not the income that's derived from those homes.
Mm-hmm. Yeah, we do the same thing. Absolutely. And, unfortunately, you make a mention of the mistake that a lot of new investors make. They capitalize that rental income. And unfortunately, I've seen many circumstances, and mostly it's a smaller local bank where folks are they'll get financing from a local bank that won't understand the underwriting process of mobile home parks. And they will also underwrite, from a credit standpoint, the park-owned home value or revenue stream. And ultimately, that person overpays for it. They over-leverage it, and there's just not a lot of value. There's not a lot of true profit to be had or to be realized on that rental side. And that's assuming that you're not deferring maintenance, that you're being a good landlord, you're being a good property manager, you're fixing issues when they occur, you're putting money back into the units. There's really not a lot of profit at the end of the day once you factor in improvements, maintenance, and also turns, right? The downtime during turns, and also the make ready costs associated with getting it back up and occupied. So at least that's been our experience. Sure. It sounds like it's been yours as well.
Sure. Yeah, I mean, from, again, an operational standpoint, you are going to have more expense to operate and to maintain those park-owned homes. However, if you've got newer housing stock, I will say that your repair and maintenance cost is less, and that income is true income. You just can't make the mistake to believe that you're going to be able to apply it to your cap rate, and it's going to affect the valuation of the real estate, because it's not. So when I go to sell, and I've got hundreds of park-owned homes throughout the parks that I've owned in the United States. I'm smart enough to know that, unfortunately, I'm not going to be able to take that income and apply it to the cap rate.
Sure.
On the buy side, sometimes it's challenging to find sellers and educate them that that's the way it works. But it goes both ways. Whether you're buying or selling, you can't apply that income to the cap rate.
Mm-hmm, mm-hmm. What are your thoughts on private utilities? How do you guys feel about those?
Well, again, same thing. Obviously, we would prefer not to have them. However, say you find a smoking deal and it happens to have a treatment plan or it happens to have a well. The deal that I just mentioned to you in Wisconsin that we sold that had both a well and it was on septic systems.
Mm-hmm.
I mean, we did very well with the deal and we bought it nonetheless. I know some buyers are very leery on buying private utility systems and they won't buy them, period. We're not like that, being opportunistic. I think we just need to price that risk into the deal. And you need to consider that you may have to replace those systems. And if you're getting it at a price and you're comfortable with the replacement cost of the system, then go do the deal. But if you're buying it based off the city water and sewer, and you're not pricing in the potential replacement of those systems, then I think that's a large error in judgment.
Yeah, no, absolutely. It's the same thing here. We do own, a preference would be to own parks with municipal utilities all the time, but we surely own some private utilities and we factor that into the overall cost going in, and also, adjust the reserves accordingly based on the age of the systems that are there and what we foresee to be the future maintenance or, replacement that might be required down the road. I want to talk to you, one of the last points I want to hit on here before we work to wrap things up is the actual management infrastructure that you guys have there. And I know that being that you, like all we do here at our company is mobile home park. So it's very black and white as far as what our management infrastructure looks like. You guys oversee multiple different asset types. I'm assuming you probably have an in-house team, but give us an idea of what that looks like. I mean, managing a mobile home park, there's some overlap to what that looks like, managing a self-storage, a little bit of overlap to managing a multifamily or an office building, right? But there's obviously unique nuances that exist in the mobile home park space. And so I guess generally speaking, what does your management team look like in-house there? And I believe you're based in California, correct?
No, we're actually based in Las Vegas, Nevada.
Las Vegas. Okay,
and,
got it.
Yeah, we have an in-house property management company that does manage all of our fund assets, and it also manages some of the assets that I own personally. Mm-hmm. And again, the overwhelming majority of our properties are self-storage and mobile home parks. So what we do is we call them commercial property managers. And those managers have a one-on-one relationship with the on-site folks at each mobile home park and each self-storage that we own. Then we have a vice president of operations, a COO, that oversees the commercial property managers. And the way that relationship works is we set up certain income goals for our on-site managers. We set up a budget for those expenses, and then we actually give bonuses out for collections. One of the things to this business of being an operator, and I'm sure you could attest to this, Kevin, is it's all about collecting rents, right? And what we do, we have a whole infrastructure that we've implemented, and we have a couple core competencies that we've developed over the years of owning and managing these properties, which is very specialized. If you were to find a property manager who specializes in apartments and you bring them into the mobile home park space, I mean, there are nuances between the two assets. And if they're not accustomed to the operations of parks, I think they're going to have some challenges. So through the years, we've been kicked down the street, and that's the only way I think we've learned, and we've learned from our mistakes. And as a result, we've implemented some of these strategies that has made us successful managers of mobile home communities. Yeah,
no, that's some great insights there, and all great information, Matt. And I wanted to ask you if you had any, final words of wisdom that you might be able to leave with any of the new or aspiring park investors that are listening into this show here that may motivate and inspire them as they progress in their mobile home park investing career. Any words of wisdom that you might leave with them?
I think the best thing I could tell you is take action. Go out there, make it happen, start looking at opportunities, get educated. If you want to focus in this space, I mean, the best thing you could do is go out there, start reading some books, start listening to some tapes. I know there's a lot of instructors out there that teach specifically this asset class. Learn as much as you can. That's what I did in the beginning. Mm-hmm. Start talking to brokers, start looking at deals, look at offering memorandums, start looking at P&Ls and understanding how these assets function and how they operate, and get get well acquainted, and then go out there and start making offers and be comfortable with the management side. Be educated on how you're going to manage the property once you acquire it. And if you're overwhelmed in that process and you just don't think that's for you and you want to take a more passive role, that's okay, but make that distinction. There's no question this is a great asset class to be involved in if you want to invest. The only question that needs to be answered is, do you want to be active or do you want to be passive? Mm-hmm. So make that distinction. And if you want to be active, educate yourself and go take action. Start making offers, start going out there and looking at parks and understanding it, and put some deals together and start making some money. There's no other way of putting it, I guess.
No, that's all great advice, Matt. And for the folks that have an interest in learning more about you and your company, what's the best place to reach you?
Yeah, our website is www.crystalviewcapital.com. And there's a contact link on there. You could reach me direct if you have any questions. I'm happy to answer them for you.
Yeah, well, that's fantastic, Matt. Thank you so much for joining us here today, and it's always good to catch up with you. And we need
Absolutely.
need to definitely stay in touch on a more regular basis.
Absolutely. Let's not wait 5 years until the next podcast. Let's do it next year if we can, Kevin. Yeah. It's always a pleasure being on with you.
Yep. Well, good deal. Matt, that's all we have for today. And folks, that's all we have for today's episode. But real quick, before we say goodbye, just want to remind everyone that's listening in here about the free gift that we offer to all listeners that take the time to go over to iTunes and leave an honest review and rating there on the iTunes platform. We'll actually give you the exact cold call script. As Matt had mentioned, that they do a lot of outbound cold calling. They find a lot of their deals that way. We do the same thing. And for those that leave that review and rating on iTunes, we'll give you the exact cold call script that we use in our very own mobile home park business here at Sunrise Capital Investors. We bought a number of deals that way. It's a great source of kind of cutting out the middleman and going direct to owner, as Matt and I have again talked about here today. What you need to do to redeem that cold call script is just essentially go to the review on iTunes and then submit us an email at gift@mobilehomeparkacademy.com. Just let us know what your screen name was on iTunes when you left that review, and we'll immediately, in return, send you a link to that cold call script. And also be sure to stop by our website, which is mobilehomeparkacademy.com. You can download our free ebook, which is the 21 biggest mistakes mobile home park investors make and how to avoid them. It's a free book. It's an easy read. I'd say it's a required read. Lots of the mistakes that ultimately we made in the very beginning that hopefully you can avoid as you guys get into this niche or as you progress in this niche if you're already buying parks here today. So again, thank you again for stopping by and joining us here at the Mobile Home Park Investing Podcast. And this is your host, Kevin Bupp, signing off.
Congratulations for taking the necessary steps to achieving massive success through the highly lucrative niche of mobile home park investing. Be sure to visit our website, mobilehomeparkacademy.com, to download your free digital ebook version of the 21 biggest mistakes investors make when buying their first mobile home park and how you can avoid them. And while you're there, be sure to subscribe to our free monthly mobile home park investing newsletter, which is jammed full of valuable tips, tricks, and strategies to help you accelerate your path to success as a mobile home park investor. More information about this podcast and its hosts can be found by visiting mobilehomeparkacademy.com.